Hello, welcome to Scale by Design. I am your host, James Mackey. We have an exciting episode for you today. We're joined by Gaurav Mehta. Gaurav, welcome to the show, man.
Yeah, thanks so much for having me, James. Excited.
Yeah, for sure. Thanks for being here. So Gaurav actually has a really cool story. He started a VC fund called Crescent Fund, which is a micro VC fund focused on student startups in the Southern California area. So yeah, we're really pumped to have you here. And I was hoping that you could share a little bit about your background yourself and what inspired you to start your fund.
Yeah. Thanks again, James. Yeah. So as I said, yeah, Gaurav, I'm from Southern California originally. And so kind of Crescent's a bit unique, maybe in compared to like other funds and kind of maybe my background as well. I'm still, just graduated college, went to UC San Diego and I'm from the San Diego and Southern California area. So when I kind of all my life growing up, I was kind of surrounded by just a lot of great like engineering driven friends and people that are just like loved STEM and stuff like that. But necessarily didn't see maybe the value or kind of the excitement of maybe pursuing your own path or like starting your own company or kind of like building projects or products from scratch. And so I saw, since like high school, I'd see like a lot of friends that just kind of had a lot of talent, but necessarily didn't really see that as like a viable option. And so I got to college and I actually thought that I wanted to get a PhD first. And so vastly different than this whole like startup and venture ecosystem. And so when I got to college, I thought I wanted to do a PhD, went and did a bunch of research in labs and things like that. But I quickly realized that it wasn't necessarily for me. And I loved seeing like kind of like maybe products in the real world. And so between my like first and second year of college, I was just kind of thinking about what else is out there. And I had a friend from UCI, a friend from USC, and they basically came to me and said, they have this cool idea for this fund. They want to raise like a micro VC fund called Crescent Fund. I went to UCSD at the time. They're like, okay, would you kind of help us, with the UCSD portion and like that coverage? And I thought it was like a really cool idea. I didn't know anything about venture. I had like a pretty good network of like technical founders being at like a STEM focused school, but didn't know about venture and anything like that. But I just thought like, it was a very like mission driven thing. And so kind of backtracking even more, yeah. So Crescent Fund was started, about like 2 years ago, just like under $1 million fund focused on, as I said, student startups in the Southern California area. So that's like schools like UCLA, USC, Caltech, just really great like STEM and engineering schools. But our kind of focus was they're kind of overlooked by maybe other venture firms, or even like the students on these campuses didn't have access to like great resources for like building companies compared to some of our other friends at other schools. And so we thought, there's this huge gap of engineering and tech driven talent. Why isn't there something to kind of bridge the two? And so that was kind of a lot of the thesis there. And then kind of secondary was, we see a lot of cool deal flow and a lot of cool deals from the early stages. So we can kind of be a pipeline for maybe later stage VC firms and kind of show off those deals there. And so, yeah, that's kind of, the background and the thesis for the fund in a nutshell there.
Yeah, that's really cool, man. And I would love to learn a little bit more about how you really got started and started raising. And I think you were also telling me some stories about you've had the opportunity to partner with like Sequoia and some of the pretty well known VCs. So how did that work? How did you get your foot into those doors and make it happen?
Like 2 years ago we were like 18, 19 at the time. And as you can imagine, like we were a bunch of kids with like no connections in venture and, didn't really work as like an operator or anything like that. So the number one way that like, the idea really started off was just like cold emailing. And like as simple and easy as it sounds is like you go everywhere, just try to find out, who do you have that's like some connection at like any VC firm. And then from there, you just kind of tell them, I have this idea, for this like micro VC fund, just kind of get their thoughts and kind of like learn from them and just like learn, what are all these things that I'm missing when I'm like trying to think about what I need to do to like raise this fund and like have this goal. And that kind of gets you, you kind of get your head in the right place. And then from there, those introductions and those like emails and stuff like start to compound. And then people start, and especially in the venture world, a lot of people love to just like talk and kind of like share deals and share a lot of things. So that's like a really cool byproduct is people talk about it and then you get, cool introductions and stuff. And so over time, we just would write, like maybe hundreds to hundreds of cold emails and just to anybody in venture. A lot of them tended to be alumni from our school, which was like pretty helpful to even get a response. And so that kind of like built up over time. And so then similarly, like after you start to have those like initial conversations of like maybe getting to know each other and getting to know kind of the idea, then those kind of like turn over into actually like, like possible like investments from those people, where now they start to be a little more interested. And now they see, okay, there's this kind of value I have of having a lot of these kids with a presence on these SoCal universities. I don't have the time to personally go and be boots on the ground at these campuses, but these kids are already doing that and already have these connections. So I can just kind of invest in their fund and get access to their deals and access to maybe like financial returns from that. And so that over time, again, like, the path to getting the first check was really hard, and we're like really grateful to kind of have those people. But again, once you get like the first check, then everything just kind of compounds. Everybody kind of talks, and we had a bit of an atypical, I guess, like fundraising process from other venture firms, where we were focusing a lot more on just individuals and maybe alums from our school, not like traditional like endowments or something like that. So that was like a really good word of mouth opportunity. And then, yeah, so over time, that's kind of like on the fundraising side, but then kind of simultaneously we're building up, the presence on like these different SoCal campuses. So that means like all these different incubators, accelerators, hackathons that are going on these campuses are kind of all new avenues that, a company or a student founder could like be lurking in. And so we kind of just built these relationships and kind of went to work just meeting a lot of founders. And over time, again, same thing, just things like start to compound and people hear about it. They kind of realize, oh, wow, there's this great resource for kids to like, take some investment money and go build their company. And so that over time, like that kind of showed, like proved out kind of like a more deal flow. We started hearing about a lot of different companies that were like right at the inception stages, like before kind of other people. And then that's kind of how it was, where we had these like kind of two prongs of like networks, one kind of like this investor side, like the VC side, and then a bunch of like student founders. And so once we started to invest into companies, that's kind of when we noticed like, okay, well, and so for some more context, $1 million fund, we write 25K checks into companies. So certainly not like leading around or by anything. And so we write in this little check, but we realized, okay, we need to kind of syndicate these deals and kind of get them into maybe like, introduce some of these student founders to like other VCs that, these students don't have the network to do that. And so that was kind of how we got to work with a lot of really cool firms, just by kind of like building up the network on the investor side. And then we're just kind of syndicating and showing them deals of, here's like kind of the first look at what's happening on these campuses. Maybe you do the deal right now, maybe you'll do the next round or something, but we're kind of building those relationships really early on. And that was like really great for the students because they didn't have access to those people, and kind of the same for the VCs, like, they didn't have access to a lot of like the next generation of founders. And so that was kind of how we built that.
Oh, that's really cool, man. Nice. And so what at this point in time, like what are you guys like focused on, and how do you see the fund progressing over the next few years?
Yeah. So we kind of raised like a bit short, like still kind of, I guess, like opportunistically raising kind of the fund, kind of finishing that out. But really the number one priority is just kind of like building, strengthening relationships with these like founders. So that way, when it's time, a lot of these great founders are building companies and we're their first check. That's kind of the one goal that's kind of always been our goal and kind of like driving star. But the second thing is, there's a lot of founders that we just have not met yet, even across these campuses. And so still to kind of get there and kind of, invest in those great companies. So now it's a lot more, the first year and a half, 2 years was really focused on, how do you even incorporate this fund, get all the legal stuff ready, raise the fund. And then now it's really focused on deploying, finding deal flow, more typical things than like kind of other venture funds. And so one other thing with that is like Crescent, kind of like the structure of the fund is a bit different, because we have all these different university campuses that I mentioned, but at all these schools, we have kind of maybe like 1 to 2 student partners that are kind of like boots on the ground at those schools, kind of serving as like almost scouts at these schools. So we have like a total team of around maybe 15 students right now. So there's kind of like 3 general partners of the fund, kind of handling a lot of the administration, back office stuff, and kind of like doing that. And then there's all these different student partners that are kind of like the driving force of Crescent being the deal. So that's kind of the really big thing that we're focused on is, one, growing that team, but making sure, recruiting and like maintaining that team, and kind of similar things to like kind of maintaining like a company or like managing there.
For sure. Nice, nice. And so one of the things that I wanted to talk to you about as well is just like, students that are graduating school, what are they thinking about in terms of what they're looking at, the market, different companies out there? What industries and markets are they really most interested in working in right now?
Yeah. So I guess, yeah, it's very, very interesting. So like, maybe 2 years ago when we started the fund, it was a different, obviously, like environment, and like sort of like the macro and like broader market environment. And so, there's all these great, like these are all like really great STEM and engineering schools and computer science schools. So the I guess like the very big kind of path for a lot of, really talented engineers and CS people was like kind of go work, do some internships, and then kind of go work at like a big tech company. And like it's a great opportunity, and you get to make a lot of money right out of school. And it's like kind of a lot of students had worked really hard for that. And so that was definitely the path. But kind of over time, like in the last couple of years, obviously there's been a lot of layoffs, maybe like hiring freezes and stuff like that. So now students are kind of taking a bit of a different path. And so Crescent was kind of born with like a similar philosophy where, when you're out of school, and all things being equal, you kind of have like a bit of less responsibilities for a lot of people, or a lot of less dependencies. So you kind of, that's one of maybe the time that if you're just trying to start a company, that could be one of the better times, because you kind of have low spend and you have all these great ideas. When you're in college, you're just kind of around a lot of people, the ability to try a lot of things. So kind of Crescent and like the student fund motto was created to support that. And come out of school, try to start your own company, or maybe work at a really early stage startup, to try to get those muscles really in. And then so now we're kind of seeing that actually come to fruition a lot. Just I guess it was kind of almost forced, because there was not many other jobs or things like that. So students are now kind of doubling down on themselves, maybe like starting whatever projects or companies that they had idea for, and now really like going full speed ahead on that. Or they're maybe working at companies they wouldn't have thought they would have worked at originally, which is like early stage startups, mid stage startups that, they thought, okay, they're just very risky, or maybe I'm not as interested in it. But now they get to hear they're kind of on the look for all these like different unique opportunities. And that's kind of where they hear about it. And yeah, so I guess, yeah, the second part of that was kind of like the industries. And I guess like broader, like definitely like the traditional kind of tech companies and like B2B SaaS or stuff like that is like predominantly where I find a lot of kids that are working on. But I think what's really interesting now is a lot of students are just becoming really, they're realizing that they want to work on things that they're like pretty they feel are pretty impactful, and like kind of they have some like buy-in into it, as opposed to maybe working on like a small feature or something. And so we're seeing a lot of really cool like companies and stuff like that being formed out of a lot of these Southern California schools, related to like carbon and kind of the energy crisis, related to maybe defense or like space, as well as like all these different things. There was a huge boom in like kind of like fintech and crypto, where people wanted to make like better banking systems. And so I think that's kind of like a new, I guess, like paradigm of where students are flocking to.
Yeah, for sure. I mean, space is heating up. It seems like we're starting to see more activity in the DC area with
Yeah.
some interesting space startups. So that's pretty cool. And so I think, yeah, you were saying specifically for San Diego and LA, you're seeing a lot of biotech, aerospace, impact driven industries. And I think you were saying like currently you also mentioned gaming and entertainment as well. Is that something that a lot of students are looking into, or is that something that's already been established for years in terms of what they're
Yeah.
looking into?
Yeah, it's definitely kind of both. Like it, I guess, like, yeah, to the first part, like, yeah, San Diego itself is like definitely like a very big like biotech hub, as you can imagine. And so a lot of students, even at like UCSD and stuff like that, studying biology, going to work at different biotech companies in the area. Just you drive off campus and there's like 100 just right there. So it's pretty easy to go do that, and especially in the LA area too. And then like conversely, the LA area is like really, maybe defense and space driven. There's a lot of military bases. A lot of companies were kind of born out of those universities. And so a lot of like UCLA, USC students tend to go work at those companies as well. And then, yeah, like that's like the gaming and entertainment piece, like that's definitely a strong point. I'd say like definitely more so for like the LA area. Like gaming, and there's like EA has a studio in LA, pretty close to campus. A lot of students want to go work there, and that's definitely a bit entertainment as well, like movies and that whole like cinema scene. Actually, a lot of like cool companies are being formed, maybe tackling that entertainment space as well.
Nice. Yeah, that's really cool. So curious. So the students that are graduating, now this year, last year, that are thinking about or have started companies, I'm wondering like what is their perception of what's happening in the market right? Because it must be a pretty wild time to graduate, because there is no normal. Like, people talk about a new normal, which is kind of BS, right? Like, we don't know what normal is because it's just been changing so rapidly. So, like, I mean, I guess it's going to be different for different folks, but are you seeing any trends in terms of how students are thinking about whether or not it's the right time to start a business, or what it's like to fundraise right now? And how much do you think what's happening in the market and within tech is really impacting entrepreneurs that are thinking about starting a business or just have?
Yeah, I think like students, one, like, none of us have really been of the age where like we kind of realize what's going on. Like until like, those other crashes that happened, but we were way too young, so it didn't really like affect us as much, maybe. And so now students are, I guess, like, especially coming off the last few years where, you'd hear your friends making like 250, 200K out of school, working in like a tech company, and kind of all these like really inflated offers and stuff like that. That was kind of like a lot of students were kind of gunning for. And that was maybe like the thing to kind of like the prize. And so students kind of thought like when we got into college, that was kind of like what the normal would be. But we realized now that, that was atypical, and that was kind of like a byproduct of maybe a different type of environment. And so now, like when students are kind of searching for, a lot of students always, I guess, like if you're like definitely like an engineering or like STEM maybe, or like a business minded student, when you come into college, you kind of have a lot of like freedom and like thoughts of like, I want to start this company, I want to start working on this. And so, but the problem is by the time you're like a junior or senior, you maybe have an internship offer, a job offer lined up, that you kind of like put your kind of like dreams or projects to the side in favor of this like internship or job prospect. And so what we're seeing now is, with the ability that like you don't really know if you have a job at the end of school right now. So why not just kind of go work really hard on whatever project or company that you have? And maybe that turns out to be something that you can, work on that for a couple of years until maybe other markets recover and you have the ability to go do something else. But also, yeah, definitely like the other thing too is, I know a lot of students were like typically like did not want to go work in startups like outside of school, especially from a lot of these SoCal schools. When you have the ability to go work kind of in a bigger tech, more stable tech company, why kind of choose the inherently risky path? But now we're seeing that has kind of flipped on its head, because there's a lot of startups that have raised a lot of money, or a lot of like good, strong money, and have like strong defensible metrics that kind of back that up. And so that's a great place to go and work now as your student, because you get to learn a lot. You kind of have a bit more stability than in a bigger tech company where things can change really fast, as we've seen. But you get to like solve a lot of the cool problems and maybe be a part of a small team. And so that's something. And a lot of these companies are really open to hiring, new grad, like kind of happy, scrappy engineers. And that's kind of the breed that is here in the student level.
Yeah, for sure. I think like more and more people are starting to see that W2 is almost like this false sense of security, even within big tech, like what we're seeing with all the layoffs, like in Salesforce and everywhere else, right?
Definitely.
There's a lot of, there's different theories, like, there's the idea of like cost cutting due to economic reasons for earnings, or stock prices, these types of things. Then there's, the whole performance element. Then there's also an element of performance along the lines of, too, hey, we have a lot of people we've given big salaries to, they're going to start to need raises if we do think about making cuts right now. We could save that on the budget and then invest more in the folks that are delivering. So there's all sorts of ways that companies are looking at it. I think some are also just like, other people are cutting right now, so we can make big shifts to our P&L and not necessarily take the heat for it as much as we would potentially in another market. So there's all sorts of different things happening, but hopefully this is really like a lesson learned potentially for a generation coming up, is that there really never is like a sure bet, right? What may seem risky versus less risky, it's very, very hard to anticipate. And I don't think a lot of people, a year or two ago would have anticipated that late stage would have been most vulnerable, and that early stage is actually doing the best right now. The other end of that, right? Like for students and people coming up, it's like working at early stage companies can be a lot more stressful, right? Like there is it's, when you go to a more established company, you have your role clearly outlined, exactly what you're accountable for. You're probably going to have more enablement, onboarding resources, these types of things. Whereas in a startup, they're just going to throw a bunch of shit at you, and 3 months from now, your job's going to look, totally different, right? So there's that aspect too. But it's interesting, right? Just to see like what's on the market. And like one point that I like that you brought up was that maybe people don't have as many jobs lined up in tech right now. And so it's actually like, it'd be kind of funny if we see like an increase in companies started by your alum, just because they're like, well, fuck it. Like I might as well, like, let me see what I could do here in over the next couple of years. Right.
Yeah, definitely. Yeah. Previously, yeah, like last few years, kids would know maybe like September, October of before they're graduating, like so almost like 6 to 9 months before, about like where they're going, maybe have a few different offers. But now, a lot of friends are kind of now in it's like February, graduating in June, like still kind of scrambling, trying to find things. And I think that, yeah, it's definitely to what you said, like nothing's really a sure bet. And I think that's something that may have been taken for granted for the last couple of years.
Yeah, no, for sure. The last couple of years were just kind of insane, right?
Yeah.
Yeah. What was that like? So before the market correction, well, in tech started happening, like let's say things started getting a little weird. Q3, particularly Q2, Q3, it got really rocky. Q1, we could kind of see it coming, but I feel like a lot of us were still pretty optimistic, like, yeah, it'll work itself out, right? And then it kind of just slow decline. I'm assuming like in 2021, beginning of 2022, where like you're were the a lot of the students that you knew, were they just getting like everybody was getting multiple offers within tech, or you said it was like a lot of them were getting like 200K base salaries without experience? Like, was that actually like happening often?
Yeah, I guess like it was like more so like the 200, 220, maybe like total comp, like with stock and
Okay.
stuff like that. And so, yeah, students, multiple internships. I say like kind of, yeah, the hot path was, in your undergrad, maybe intern at a few different companies, big tech companies, small companies, whatever. And then as you're graduating, go work at like a pre-IPO company. I think that was like, or like a late stage company, because it's like you de-risked yourself. They're about to IPO, so you're going to get liquid really fast. But then now we're seeing, like, as you said, like a lot of these, there's a lot of like just stale pre-IPO companies. And so people, and a lot of layoffs there. So that's not really, I guess, the path or the in path right now. So that was like definitely something that's changed over the past 2 years though.
Yeah, and it's weird, right? It's like, how much do you adjust your strategy? I mean, like, like big tech, like growth stage tech is going to rebound, right?
Yeah.
And tech typically is going to rebound a lot faster than other market segments. If other market's going through a downturn, that potentially could take a lot longer to right size. Tech is very aggressive with growth and very aggressive with cuts, but they usually, our industry acts very quickly either way. And I think that tech for the most part has done that this time around. And I mean, this is going to sound like an echo chamber, but a lot of us are basically at the belief of stabilization. Q1, Q2 start to see more growth. Q3, Q4, just not like 2021 is not going to repeat itself. So don't think that a healthy market looks like that, because that was just inflated. Like that's not going to come back, right? But I think like a lot of folks are of the mind that things are going to come back to so to some extent. If like students or companies, whether it's companies targeting an ideal customer profile or students targeting a career track, you don't necessarily want to derail the whole thing just because we're in a temporary downturn. But in terms of like short-term jobs, like now, yeah, like seed, series A are basically probably the best places to get into tech. And then every time you go another level of like check size or series round, it's harder and harder for those companies to right now, basically have the right cash flows and run rate and burn and all these types of things to hire. And most of them are going through layoffs. So there's fewer and fewer opportunities the higher you get closer to pre-IPO right now, which is pretty wild. And like for my company, Secure Vision, we're a services firm for the tech industry. We do embedded recruiting. So basically we plug in recruiters that act like internal recruiters on demand. And so we have a lot of like market indicators, and we're, when the market starts to turn down, typically companies like mine were the first to get scaled back. And then when the market rebounds, we're the first to come back. So we kind of are an indicator of the greater market. And what's really interesting is that in 2021, early 2022, like half of our customers were like late growth stage, pre-IPO, public, right? Enterprise, that type of company. And then like the other half was early stage, like seed, series A, right? Maybe series B, right? And what's interesting now is in this market, like literally 85% of our revenue is coming from early stage. Like most of our clients are pretty small. And then the big ones that were like category leading companies, they've paused because they're not hiring. They're going through massive cuts. They're offshoring. they're changing their strategy completely. So just to, from my hands-on perspective, what I'm seeing in my own company, yeah, Series A, man, holding it down when it comes to hiring and opportunities for students and folks that maybe were just laid off by the sales forces of the world. We're going to start to see a lot of people go from big tech into startups. And then watch a year and 2 years from now, we're going to see the fallout of that, where a lot of people that were in big tech say like, screw this, I don't want to work for this startup anymore. Right. But I think we're going to see that funnel go. A lot of people work for startups and then a lot of people leaving startups again in a couple of years. That'd be funny.
Yeah, definitely. It'll be interesting to watch all that. Yeah.
Yeah, for sure, man. Well, hey, look, this has been a great conversation. I appreciate you coming on the show, joining me today, sharing your unique perspective, both coming up as a student, running your own fund, starting when you did is I just think like a really impressive story as well. And so I would love to keep in touch and keep you posted with how your fund is progressing. And when you have a fun update that you want to share with us, you're welcome to come back on the show and tell us about what you're doing.
Awesome. Yeah. Would love to. Yeah. Thanks so much for taking the time and for having me on, James. It was a pleasure. And
Yeah. This was fun, man. Thank you so much. Thanks for contributing. And for everybody tuning in, thank you for joining us today. If you know of a guest that you think would be good for the show, definitely please reach out. You can go to scaleupbydesign.io, or you can reach out to me on LinkedIn directly. And if you're getting value from the show, we'd really appreciate a review. If you could leave one on Apple Podcasts or Spotify or wherever you're listening to this. And we do publish an episode every Wednesday at 5 a.m. Eastern. So make sure to tune in next week. Thank you so much. Take care.